Starting to invest can feel like staring at a giant, confusing puzzle. Where do you even begin when you have $0 and a million questions? Today, we're going to put that puzzle together, piece by piece. I'll show you how to build your very first investment portfolio from absolutely nothing, turning those loose pieces into a clear path to wealth. This isn't about what to buy, but how to think about building your financial foundation. Before you even think about buying your first stock, we need to build your foundation. Think of it like a house. You don't build the roof before the walls. The first piece of our puzzle, even before $0 becomes $1, is to address debt. Not all debt is bad, but high-interest credit card debt? That's a wealth killer. Step 1. Eliminate high-interest debt. Step 2. Your emergency fund. Remember our solo fortress? That's your safety net.
You can't build wealth if every unexpected bill forces you to sell your investments. Now that our foundation is solid, let's talk about the most crucial piece, diversification. This isn't just a fancy word. It's your portfolio's superpower. Imagine putting all your eggs in one basket. If that basket falls, you lose everything. Diversification means spreading your investments across different assets to minimize risk. It's how smart investors protect their money and still capture growth. Let's look at the main pieces in most investment portfolios. First, ETFs, or exchange-traded funds. Think of an ETF as a basket that holds hundreds or even thousands of different stocks or bonds. It's instant diversification. You buy one share and you own a tiny piece of many companies. They're excellent for beginners because they are low cost and diversified by default. Next, we have bonds. When you buy a bond, you're essentially lending money to a government or a corporation, and they pay you interest. They are generally less volatile than stocks and can add stability. And then there are individual stocks, owning a tiny piece of a single company. This carries more risk, but potentially more reward. Finally, for some, real estate can be a long-term piece, either directly or through REITs. The key is to understand what each piece does for your overall puzzle. Now, how do you know which pieces fit your puzzle? It comes down to time horizon and risk tolerance. If you're young and investing for 30+ years, you might want more growth-oriented pieces like ETFs. If you're closer to retirement, you might prioritize stability with more bonds. This isn't about picking winners. It's about aligning your portfolio structure with your personal goals. Your portfolio should grow with you, evolving as your life changes. So we've built the foundation, understood diversification, and explored the core assets. But there's one final, crucial piece to this puzzle that most people overlook. You. Your knowledge, your discipline, your consistent contributions. An investment portfolio isn't a set-it-and-forget-it button. It's a living thing that requires your attention and education. Don't be afraid to start small. The most important step is always the first one. I'm Barb, and I'm here to help you put your financial puzzle together. Subscribe for more guides on building your wealth, piece by piece.